Hello and welcome to Connect, the weekly podcast of the California MBA featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Susan Milazzo, CEO of the California MBA, and very happy that you can join us today. Before we get to today's guest, I'd like to thank the Connect podcast sponsor, Incelerate.
Thanks, Susan, and thanks for listening. This is Josh Wren, CEO and founder of Incelerate. We're grateful for our partnership with the CMBA and are committed as a company to help lenders close more loans. We do this with our customer experience platform that has a CRM, lead management, marketing, automation, robust content library, desktop and mobile applications. We do this to help you engage and stay connected to your current borrowers, referral partners, past borrowers, and potential new ones. If you want to find out why we're the fastest growing CRM provider in the mortgage industry, please reach out to us and ask for a demo.
Okay, well, thank you, Josh, for that. And that brings me to today's guest. I'm very happy to welcome Aaron King, CEO of Snapdocs. Welcome, Aaron.
Thank you. Happy to be here.
I was just sharing with Aaron, we were getting started. I've been pursuing him as a guest for quite some time on Connect. I was very impressed with kind of the story of Snapdocs when he and I chatted at an event last year, and so I'm happy that it has finally come to fruition. With that, Aaron, I kind of like to get started with everybody kind of in the same way. Tell us a little bit about your background and how you got started in the mortgage industry.
Yeah, absolutely. So I grew up in Southern California, which I didn't know at the time, but I now know is one of the epicenters of mortgage companies and the mortgage industry. And I actually got my first job working in this industry when I was still in high school.
Wow.
And so, there was a direct lender called Pacific Prime in Southern California. I'd be there after high school, sort of answering phones, dealing with post-closing packages, managing notaries, sort of anything that needed to happen. But through that, saw the sort of notary side of the business, got my notary license when I turned 18, started doing mortgage closings full time, and then started my first company in the space back in 2001, which was called Notary Link, which was a nationwide mortgage closing service. So worked with notaries and attorneys all over the country, contracted their services to lenders and title companies, and ran that company for about 7 years. So I think in total, I've been in this space specifically focused on mortgage closing for something like 25 or 26 years.
That is impressive. Nobody, it's funny when you ask people when they get in the mortgage industry, it's like nobody said, hey, I always wanted to grow up and be in the mortgage business. But, you coming in from, the notary side and kind of seeing the need for, services and products to be filled in the space, I think is always a great story of entrepreneurship. So congratulations to you for your successes in the industry.
Yeah, I appreciate that. I've worked a lot of jobs, even as a kid in my life, and I've always really gravitated towards this industry. I think it's really interesting and fascinating. I think there's a near infinite amount of value that you could provide both to the companies in the space and ultimately, consumers buying and selling homes. So I remain incredibly excited and motivated to keep solving those types of problems.
They're a fun industry. They certainly keep us busy.
Yeah.
So, this year, 2022, we're seeing rising interest rates. All my lender members are sharing pretty much across the board the same. Margins are decreasing. Everyone's focusing on customer experience, improving their margins. Now, I would be interested to hear kind of what you're starting to hear from lenders.
So. Yeah, I think it's a really timely and interesting question, and we've been talking to a lot of our customers and prospects. But I've also been at the MBA Tech Conference in Vegas. I was in MBA Secondary in New York, and in those opportunities, I had a chance to really ask a broad swath of lenders sort of what they're most focused on at this moment. The most and at the highest level, Snapdocs is a digital closing platform, and so most of our interactions with lenders is around closing automation and digitizing that part of the process. But when I ask this question, it's more broad, sort of the highest levels of your company. What are you most focused on? Most consistent answer I got was automation. Mm-hmm. And when I pressed and asked, what specifically are you trying to automate, there were many different parts of the business that lenders are trying to automate, which makes sense, right? You mentioned margin compression, and automation is one of the ways to improve your margins, lower your operational costs, et cetera. And there's a lot of different ways with emerging technologies that lenders can do this. And so that's the theme that I'm consistently hearing. Digital closing, I think, is a pretty interesting place to look when you think about automation. I think digital closing and and automation are more or less synonymous when you're doing them correctly. And I think what's kind of interesting about the lens of digital closing as it relates to automation is lenders can start thinking about automating processes that a few years ago were quite hard to automate because so much of the process was outside of their walls and outside of their control. So when you think about the interaction with lenders across title companies, with the closing, the consumers involved in the closing, all the way down to the notary, digital closing is sort of this infrastructure that brings a lot of that online and just allows lenders to start asking questions about processes that used to be manual, but now can be much more digital and automated.
And I think, when you talk about automation in the industry, every industry really, I mean, the pandemic kind of forced us to a lot, to maybe adopt things that we were a nice to have, but had to become a had to have during 20 and 21. So I think that, that's kind of pushed everybody to really dig deeper into their levels of automation.
Yeah, I totally agree. And I think, that's, if there's a silver lining there, I think it was that the industry was benefited by a push towards more digital. And I think a lot of the, it's not from lack of trying over the past 20 years that lenders haven't digitized more of their process across their entire supply chain, including closing. I can remember back in 2001, we had a lot of the technologies necessary for this in their individual constituencies, eVault, e-signature,
Yeah.
a lot of integrations and APIs started to be developed, but there wasn't a ton of adoption across the years, at least as it relates to digital closing. And the pandemic really sort of forced the industry to take a harder look, push a little bit more towards the goals of digitizing more of this process. And it helped a lot of the companies involved get a bit more organized, more orchestrated, integrate with each other, and provide options to lenders that now work much better. And so I agree, there was a huge acceleration there. I believe it's a one-way door. I don't think there's a path of going back to a less digital world.
Totally.
But there's a question of how much will we accelerate and how fast will lenders keep their foot on the pedal.
It's consumer expectation. It's not only our industry, it's every industry. I mean, everything is, you have the ability to do so much more with technology. So I agree with you. I don't think we're turning that clock back. What are your lenders sharing with what are they implementing to kind of stay ahead of the competition this year?
So I think over the past several years, we saw a big push for lenders to invest in the front end of the process with the point of sale system. Some lenders built their own, some lenders went with existing providers, some lenders signed up with new companies building technology in that space. And at this point, I think most lenders have digitized and automated a lot of that front end consumer experience. What we're seeing now is a shift into more of the inner working operational automation they can focus on and a shift to focusing more on closing. And it kind of makes sense that it would follow that sort of trajectory. And so we're seeing lenders really look at every internal process, every manual process, everything that has a fixed cost today, which is quite hard to navigate through the big ups and downs of the mortgage and real estate industry, and asking the question of how do you turn some of these fixed costs into more variable costs? And that's sort of the beauty and the promise of technology in these cases, is that when you plug in some of these products like digital closing, your costs sort of scale with your volume automatically. And there's not as much, sort of ebb and flow of hire a lot of people and then having to deal with too much headcount, et cetera. And it just sort of stabilizes some of these ups and downs in the industry.
That's definitely a key component for all lenders this year, is kind of how to stabilize those cost to produce loan, for sure. Yeah. So we've talked a lot about the industry and kind of the market. I'd love to hear, what are some of the exciting things that Snapdocs is working on for this year?
We're working on quite a lot. So we've raised a fair bit of capital over the past couple of years. And as we think about, the industry is in a transaction volume decline as interest rates go up, we're really accelerating into that from an R&D standpoint and working backwards from what are our customers' biggest pain points and how do we solve them. One thing to note about Snapdocs is that, a big part of our growth, the majority of our growth right now, is coming from selling digital closing to lenders. But we actually work really hard to improve the process for all the different constituents involved in a closing. So we spend a lot of time with title and settlement. We think a lot about their workflows, their technology systems. And I believe if you want digital closing to work well, it actually has to work really well for everybody involved, including title, including notary, including the consumer. And so a lot of what we're focused on is just solving the problems of this broad set of constituents as it relates around the closing. Some of the specific areas of focus are, we've built some really interesting AI that can we call it document intelligence. It can analyze the contents of a funding package, both in flight to the closing, to make sure everything's present, everything's consistent, names are spelled consistently, the proper information is filled out. But then at the point of time in closing, we can analyze the contents again to make sure that as those documents are pushed back into the lender's LOS, every page is still accounted for, every signature made it to the signature line, every notary stamp and date, et cetera, is accurate. And so we're calling this closing quality control, but it's AI that we've developed for other parts of the process that we're applying to this kind of QC function. So we're really excited about that because we believe it's possible to eliminate errors from funding packages. And when you can eliminate errors from happening, when you can eliminate them at the point in time, you save a lot of money in post-closing and downstream processes that can become quite expensive if some of that information is inaccurate or missing. So that's a big thing we've been investing in. We've been looking more at the interactions between lender and title and asking the question of how do we make this easier? So maybe more specifically, as a lender, let's say I'm an independent mortgage bank, I'm doing 1,000 mortgage closings a month. I'm probably going to work with something like 2,000 different title companies in a given year. And so the question of how do we improve both sides of that interaction for both title and lender and automate more of it and bring more predictability and consistency to it? That's a big area of focus. And then we've recently launched an eVault. And so the industry has many eVaults. There's some great companies, great providers out there. We scale our customers on eNotes and eVaults quite a bit. And we saw an opportunity to just invest in this technology to bring a bit more stability, ease of use, and openness to it. And so this is both in service to our customers, but also to the industry at large of just trying to push this technology forward so that more lenders can do more eNotes. So that's a sense of some of the things that we're focused on.
That's exciting. That's exciting. As you continue to develop your technology, because you talk about, the other important part of it is kind of title and closing. So that element of the industry completely on board with the use of technology as well, kind of makes their job more efficient as well.
Yeah, they are. The trick is, and this might sound really obvious, but I think it's hard to do in practice. You have to make it better for them. Yeah. It's really hard to roll out a new technology, a new process change to an industry like title, which I think they're kind of heroes, honestly. The amount of work and the nuances and the details and just the work involved in getting these transactions across the line is it's not easy. And there are processes that have been in place for a long time that are tried, true, and tested. For example, executing everything on paper has been a hard thing for the industry to get away from. And I'd argue, 5-10 years ago, doing a digital closing was more work. It was harder for title companies than doing a digital closing, as an example. And so as you really think about their workflows, their day-to-day, their goals, and you build a product that genuinely makes the process better for them, they're more than willing to adopt that technology. But the technology providers have to do the hard work of really, really caring about their day-to-day and making that good.
I think your unique perspective from starting out there in that part of the industry gives you a good perspective on that. I know this is going to help their end user, so their partner in closing that loan is going to want to use that technology. So I think you have an interesting perspective, I think.
Yeah, we have some well-defined operating principles at the company, and the first one is empathy. And we chose that very intentionally because if you're not building products with a lot of empathy for the end users in mind, you're not going to build things that scale. And what's interesting is, you take lenders who have been trying to scale digital closings for a long time. There was a Stratmore survey that came out recently that asked these lenders, what's the biggest hurdle to scaling digital closings? And the most common answer was settlement agent adoption. And so sometimes companies or technology providers can be a little bit myopic in trying to solve one half of the equation. So let's build some tools for lenders that help them do digital closings. But if you're not solving the other half of the equation, that first half will never get traction and it won't get usage. And you'll see a lot of press releases around, we're doing one transaction, or we've done our first couple of transactions, but to get a lender to do 100% of their closings digitally requires massive adoption across all of the title companies in the country. And there's other constituents that matter quite a bit as well. Warehouse lenders are a part of the equation. Counties are a part of the equation. The investors are part of the equation. And so a big part of the work that we're doing is around trying to coordinate these parties, bring a ton of transparency to their workflows and connect them so that they can all work together better. But you're absolutely right. That's the insight. That's the core insight of our company is if you can build a system that makes it better for everybody involved, they're going to adopt it.
Yeah, that's fantastic. That is a great platform. Good for you and Snapdocs. You know, interest rates, you know, being what they are now, the refi business, of course, is dried up, and all of my lenders are talking about how they're improving that or providing that best customer experience. From your perspective, how would you define kind of the best customer or borrower experience?
I think this is such a good question because I think a lot of people in our space are answering it insufficiently. And so I would say that 90% of a positive consumer experience is addressed by solving a lot of the underlying complexity of all these parties working together. In other words, you can focus on something like a really beautiful web app or mobile app that allows consumers and customers to engage with their mortgage transaction. But if at the end of the day, the documents are incorrect, or they didn't get a chance to preview them before they have to sign them, or the notary didn't show up, or they were scheduled to do a RON closing, but they couldn't get online and they had a hard time reverting it to a hybrid closing or something like that. I think 90% of customer experience is actually these inner workings and the coordination across these parties. And so as lenders look to provide a better customer experience, and frankly, as title looks to provide a better customer experience as well, I think you'll get more out of focusing on that underlying consistency and predictability for the consumer, which requires, again, this tighter coordination and connection across all these parties.
Right. Yeah. I think, yeah, have the borrower walk away with feeling like, hey, I got my home loan and, you know, it wasn't a horrible process. I got, you know, had efficiency all the way through.
Yeah, and maybe another way to say it is like, it doesn't matter how pretty the website is. Like if things don't happen on time with consistency, predictability, right, and keeping the consumer in the loop, then they're gonna have a terrible experience. And the unfortunate thing is, no matter who messes up that process, which could be any one of a number of different entities involved in the transaction, the lender is ultimately gonna feel the brunt of that. They're not gonna get the referral, they're not gonna get the high NPS, you know, they're not gonna get the return business. And so this is why I think this is an interesting way to look at the problem. It's harder, because you have to solve much harder logistical coordination challenges than just, you know, building a nice UI. But ultimately, that's where all the lift comes from. This is when we build products, you know, we're all about connectivity and making the process better for everybody. We have a huge focus on the logistical coordination of all the parties in flight in a closing. And it's not just people, you know, there's technologies that are involved in this that need to be coordinated as well. Document generation into the title production system, et cetera. You know, RON provider, eVault, if those are components of the digital closing, these need to be orchestrated. And again, all these parties and all these technologies have actually existed for something like 20 years, but there wasn't the same focus on this neutral Switzerland product that will connect them and help them orchestrate together better. And that's essentially what we're trying to build at Snapdocs. That's what we've been building for the past 8 years with a fair amount of success. I don't know if we've talked about this, Susan, but we estimate that we touch about 25% of all US real estate transactions at this point. 25% of
wow.
So the process is clearly working, and what's in front of us is just continuing down this path of figuring out how do we continue to solve these problems of one party working with such a fragmented ecosystem around them.
That's definitely a difficult nut to crack. And again, I mean, just congratulations to you and to your team at Snapdocs for providing this amazing product for the industry.
Thank you.
And thank you so much for being a part of the Connect podcast series. I really appreciated talking with you, Aaron. Thank you so much.
Yeah, I've enjoyed this as well. Thank you so much, Susan.
And thank all of you for joining us today to listen to any of our past Connect podcast episodes. You can follow us on our YouTube channel. We're also available on SoundCloud, Apple Podcast, and Spotify. That's it for this week. We'll see you next week on Connect.